Greetings, my YouTube family. Thank you so much for visiting this channel. On this channel, we talk about personal finance and investing. And today I'm going to particularly talk about what I learned from investing in the US and Canadian stock exchanges. But before we get started, I just want to disclaimer that this channel and the content thereof is just for educational purposes. As such, it should not be used as investment advice. The year 2023 started on a negative note with the major US stock indices such as the Dow Jones, the Nasdaq, and the S&P 500 dropping into the bear territory. In other words, they dropped by at least 20%. And experts were forecasting a recession. In other words, a recession is the slowdown in the major sectors of the economy for 3 consecutive months. And with that, a lot of people panicked, and a lot of good businesses, as I like to call companies, they dropped at the beginning of the year, and some people, they made money, and some people, they lost money. So I'm just going to reflect and share the major takeaways. Number one, it is always helpful to have part of the overall portfolio in cash. I like to follow successful investors like Warren Buffett, who usually keeps at least 20% of the hedge funds in cash. What that means is that if there are those major drops, it's like manna is dropping from heaven. You then buy those good businesses at a huge discount, right? So that's what some investors did. So having some cash is its advantages, at least part of the portfolio. Number two, experts are often wrong. As I'm filming this video today on the 13th of December 2023, the recession did not happen. But because the probability of the recession was forecast to be high, it means some investors may have been waiting on the sideline, or some investors may have sold off some or all of their portfolio, afraid that if a recession was to happen, right, they might lose their money if they sell. Then as we look back now, the major indices in the United States and even Canada, they've gone up. It means the stock market has been going up. What that means is that some people may then try to jump in at the top. So what I like to do is that money in the market is good, because if I have specific stocks or securities, like if I want to invest in the S&P 500, I understand that it fluctuates, it goes up and down. Let's say if it drops by 5% or 10%, which is called a market correction, and I want to invest 10,000, I put in 2,000, what is called as dollar cost average. And if it drops again, I add money. But if it doesn't, I'm not going to just wait, right? What I do is, I understand that the S&P 500 is a well-diversified index, in the sense that there are 503 businesses or stocks. So what it means, there are major sectors. So some businesses will do well and some may not do well, but on average, it goes up. So if I have a long-term outlook, I just dollar cost average over time, right? If it drops by 5%, I put some money. If it drops by 5%, I add some shares. So that's what I do. But specifically for individual businesses, what I learned is you must understand where you're investing your money. You must understand the valuation. So I spend my time understanding the business cash flows, their debt, and their valuation. And when I believe that it is undervalued, for example, there are a lot of business that dropped, not because their fundamentals had changed in a negative way, but because of what was happening in the stock market in general. There was a sentiment that there was going to be a recession. So what that meant, it was like manna from heaven. Those businesses were hugely discounted. So that's what I learned, that if you understand your valuation, if you do your homework ahead of time, there is always going to be time to buy very good businesses, even at a huge discount. But for the major indices that historically have gone up, I generally average down. If it goes down, if it goes up by a certain percentage, then I do that, so that at least, because I will put in some money, because a lot of people, they lose money, like what Peter Lynch, who was a famous investor in the United States, that a lot of money is lost when people are just waiting on the sidelines. So that was another lesson. And then as a long-term focused investor, I like to focus on things that I can control, the money that I put in, the business that I invest in. So I don't worry about the macro or other external factors, like what the Federal Bank today, they didn't change their interest. But a lot of economists and experts were forecasting that they might increase or decrease, but I have no control. What I do is, if they increase, I understand the basic economics, that it causes the cost of borrowing to increase. So what would be the potential consequences? I would see when things happen. For example, if there is a sell-off or there's a negative investor sentiment, then I act accordingly. I don't try to forecast what's going to happen in the next minute, what's going to happen in the next month. I react as things happen. If there's a sell-off, if there's a market drop, if the market goes up, then if I have 80% of my portfolio in the market, then it's good news, because then it's going to appreciate. Then lastly but not least, everyone is but a genius when there's a bull run. But when there is a bear market, you will see, as Warren Buffett said, who is swimming naked. In other words, there are people who may be leveraged. So leverage, in other words, you are borrowing to buy shares. It's good when the stock market is going up. But if you have leverage, in other words, and the market drops, some people get margin calls. In other words, they have to add some cash in the brokerage account. Otherwise, the broker might just liquidate, even if it's at the bottom. So what I learned is that I don't borrow to invest. I invest with what I have after building an emergency fund, and I invest only in business that I understand, and I like to keep a diversified portfolio. That's it for the lessons that I learned in summary, but I'm looking forward to sharing my commentary and my insights in 2024. I hope you have a very pleasant holidays. Thank you so much, and please don't forget